Welcome into my Vanguard portfolio update now for the month of July in 2025. As usual, we'll go through all of the news first, look how the stock market's been going on, and then I'll actually take you through to my portfolio in real time to see how all of my investing has been going on. I'll leave timestamps at the bottom as well. If you're not interested in the news, feel free to go ahead. Anyway, let's jump straight into the markets. As you can see, over the last month, we've had quite a crazy ride in the stock market. You can see on screen now, the market's nearly up 5% if we take the S&P 500 as our guide. Now, what I'm going to do up on screen now from now on is actually show you in both currencies, because there's been so much of a difference between the UK pound and the US dollar. It's actually been skewing some of the returns that you've been seeing in your accounts. I actually made a video about this separately, so do feel free to go back and watch this one. But on screen now, you can see two lines here with looking at the S&P 500 ETF from Vanguard, which is called VOO or VOO, and then the yellow line here is VUSA from Vanguard. So I just wanted to get two denominated in different currencies to show you how it's been going on. You can see over a month, nearly 5%, just incredible. From a year-to-date perspective, here's where things get slightly interesting. We actually see those effects of the exchange rates. Now you can see here, the blue line in dollar form actually having a rise of 6.48%. But technically, us UK investors are actually down 2% year to date if we're investing into the S&P 500. However, I do not think that's a bad thing. Basically, just because the pound is strong at the moment, it just means your investments look weak. But actually, on the flip side, it means investing is cheaper when you're buying the S&P 500 right now. So personally, as a long-term investor, I see that as a very good thing. Now, finally, closer to home, why don't we actually have a look at the FTSE 100? Because I think this month might be one of the only ones where the FTSE 100 is seemingly really, really interesting. The FTSE 100 hit a new all-time high recently, hitting 9,000 points. I don't know exactly where it is at the moment, if it's actually managed to stay above that level, but actually it's having quite a good year so far. You see year to date at the moment, at least at the time of recording this video, I'm looking at 8.58%, and that's not including any dividends at all. So the UK market is having not a bad time at the moment with everything going on in the rest of the world. Now that leads me on nicely to all of the news stories. And the first leading news story was that the fact that pretty much every leading index is at all-time highs and has hit multiple all-time highs over the past month. So what else has been going on? It's actually been quite a feature-packed month if we look at the news and see what's been going on. Trump's tariffs again are taking main stage in the news. However, you wouldn't really know it from looking at the stock market. There hasn't been much reaction now. I think the market is really expecting the tariffs to either just fizzle out or not be implemented. No one really is retaliating back with Trump, maybe as he wants them to. So I'm not really sure where this goes. Some people are suggesting potentially that the market hasn't taken these seriously enough, and actually they might be shocked a little bit if he does continue through with them. But at the moment, there just seem to be empty threats, and the market is seemingly just brushing these ones off. Another story from the US, which was making some headlines, but has since fizzled out a little bit, was Trump threatening to fire the Federal Reserve Chairman, Jerome Powell. Trump seemingly is not happy with Jerome Powell because he just wants interest rates to be reduced and for the US borrowing costs to go down, which would also reduce the borrowing costs for consumers too, and things like mortgages. But it doesn't look like this is a serious threat, or doesn't also look like this is something which is even legally possible. There was a bit of an initial jitter when the news story came out, but it really has since fizzled out a little bit, as I've just said. It would definitely be quite a sad day for US presidents to get involved in the workings of the Federal Reserve. It's really important to have that independence, because if they don't, you end up with countries with hyperinflation around the world and constant money printing, forcing interest rates low. Because if interest rates are too low and the economy is very, very strong, ultimately all that's going to happen is people are going to borrow loads and loads more, and also businesses are going to borrow too, and effectively more money going after the same amount of goods is going to cause inflation. Now, alongside all of these all-time highs, there are actually companies inside of these indexes which have been flying high. You may have seen the news that Nvidia was the first company to reach a $4 trillion market cap, which is just an insane thing to say. Actually, I was looking back on who the first companies were to reach 1, 2, and 3, and actually it all goes back to Apple. Just have a look here. It was 2018 when Apple was the first company to reach a $1 trillion market cap. Then just a couple of years later to reach $2 trillion, it was Apple yet again, August 2020. Then it took them just 3 more years to go all the way to $3 trillion. Yet Nvidia was like, you're not having that crown, thank you very much. And it's hit $4 trillion. And the ride has been spectacular. You can see here that Nvidia's gone from around $100 billion market cap in 2019 to $4 trillion in 2025. So the top of the S&P 500 really is looking quite different than it did just a few years ago. And it's always a good reminder that I think in another 10 or 20 years, the S&P 500 and the global economy could look so different to what we see now. In the crypto market, Bitcoin and Ethereum are seeing quite the resurgence. Bitcoin hitting multiple new all-time highs, has fizzled out a little bit. Ethereum seeing quite a resurgence as those different stablecoin acts and crypto acts get pushed through the US legislation. You can see at the moment the Stablecoin Genius Act has passed the Senate. Now, House procedural votes cleared late July 16th, with the final floor vote expected this week. Okay, closer to home, there has actually been quite a few interesting news stories. Just have a look here. As I did mention and briefly touch on earlier, the FTSE 100 reaches 9,000 for the first time ever, and making some good news for a change. UK and European stocks have been getting a little bit more love recently, especially since all of the tariffs happening back in April. I think there's more of a focus on companies and businesses who are close to home, not only just because they are close to home, but because they are seemingly unloved and untouched. And no doubt there are some bargain hunters out there who see the UK and Europe as some good places to invest and untapped markets, whereas all of those famous US tech stocks get all of the attention. Seemingly all of that has already been priced in. So the market is now taking a bit of a turn. How long this will last, I have no idea. But actually, if you do go back over the last 5 years with total returns on the FTSE 100, for example, it's actually done pretty well, all things considered, when you also get those dividends being reinvested as well. Now, unfortunately, it's not all good news, I'm afraid, with the rest of the actual economy underlying the UK at the moment. You can see in the data now that's 2 months in a row of negative growth. Unfortunately, the UK economy is not in a growing stage at the moment, which is unfortunate because, as I'll touch on in just a moment, and really two news stories that go together, UK inflation is slowly creeping up. Now, with inflation creeping up and growth basically flatlining, the Bank of England especially is in a very difficult position at the moment, where there is pressure for them to cut rates, and there is expectation this summer they'll cut interest rates from 4.25%, where they are now, down to 4%. However, if they keep cutting rates and inflation keeps going up, you basically end up in a position where we've got stagflation at the moment. So that's slow growth and high inflation. The only way to get out of that, we really need to get UK growth going again. Otherwise, you're just going to keep reinforcing inflation if you reduce interest rates too quickly and too low. So this is going to be a really important thing to keep an eye on over the next few months. And we definitely don't want to see the UK go into recession if we start seeing 2 different quarters of negative GDP. But let's wait and see where we are. I'll certainly be reporting on it on my channel. And finally, something I covered on my channel was Rachel Reeves' Mansion House speech. Nothing that was announced was quite extreme, really, or anything that was unexpected. Most of it had already been leaked and put out to the press. The one big thing which people were expecting was those changes to cash ISA limits, but they have been now put back on hold and going out to consultation. So whether those cash ISA limits and allowances do get dropped, we're not sure. Potentially this could happen in the new financial year, so do look out for those. I've made a video going through everything which I spoke about in the speech. Just go back on my channel. You'll see it's the latest video that I just did before this one if you are interested. Okay, time to jump into my Vanguard portfolio itself. If you're a brand new viewer, let me just explain what this is and what's going on. I actually just use Vanguard for my self-invested personal pension, and I have to invest in my pension myself as someone who is a director of a limited company and runs my own company. So all of the money that I put in here comes from my limited company. Effectively, I have to be the person putting money in. Many of you out there will have your employer put money into your pension, and every month you'll have money going out of your wages that will go into a private pension somewhere, which is a totally separate topic, but I do encourage more people to actually go out there and understand what their pension's invested in. Here, I invest my pension money myself, and I choose what I want it to be invested in. So I keep things really, really simple. I really focus most of my time on just trying to get as much money in as possible. And actually, remember, pensions are so tax efficient. So when money goes into my pension, I already consider that money to be up, if that makes sense, regardless of what happens in the stock market, because there's less taxes to pay and there's huge tax reliefs for putting money into pensions. Effectively, from a personal perspective, you can have no income tax paid on them. And from a business perspective, there's no corporation tax to be paid on it. And then also there's no dividends taxes to pay for it either. That I have to worry about personally. So there's huge tax benefits to pensions, which, who knows, they could change in the many, many years to come. But for the time being, they're one of the best and most tax efficient ways to actually save money and help build wealth for the long term. So eagle-eyed viewers may notice that I've hit quite a nice milestone into the pension at the moment. As you can see, over £100,000 now, which is a really, really encouraging thing to see. But remember, that's only because of the amount of money that I'm trying to put into this. So it's going to go up almost really whatever happens to the market. The price of the market and what happens in the stock market is totally irrelevant for me. As a long-term investor and using this pension, I make sure I invest every single month. So let me just show you what I've done. Now, I've tried to focus as much as I can at the moment and trying to put more money in this financial year than I have done in the past. So as you can see now, I actually did this on the last day of June rather than the 1st of July, put in £4,000 into my pension, which obviously is a lot of money. But remember, my situation is slightly different from most people who are working. So don't be discouraged thinking, wow, I wish I could put that amount of money in. Very different when you're running your own company, when you're an employed person. So don't really get too much, worried about large numbers like this. This is the same whether you put £40 or £400 in every single month. The concepts of investing every single month and consistently are the same, no matter how much you put in. Yes, the more you can put in, the better, but don't get too hung up on this. I really want to show you the process and not necessarily being hung up on the amounts themselves. Although the amounts are nice for the ego, it doesn't mean anything to me until really that it will matter much later on toward retirement or whatever that means. For investments, as many regular viewers will know, I keep things so simple in this pension, which is slightly different from my other accounts where I allow myself a little bit more freedom. I just have a single mutual fund here, this FTSE Global All Cap Index Fund. Basically invest in most companies from around the world, all based on their market cap weight. So yes, I'll get companies like Nvidia, Apple, Microsoft, etc., all organized by their market cap weight. And actually, with a portfolio this size, I'll own quite a nice size of some of those big companies, and then I just let everything else worry about itself and settle itself. I don't focus on the value here, and I don't change my investing based on the value of the stock market. I don't try and time things. I always like looking at the performance chart here, and I like to go down month by month as well, just to see how things are going. So if you see here, as you can see, if I do go through month by month, we can see that crazy period we had with all the tariffs, putting the returns of the portfolio down quite a lot. And since then, since the recovery in May, June and July, the market's been going on a bit of a tear. So you can see this month already, personal investment returns £2,761.51, taking the cumulative returns of the portfolio itself. This big number here is the largest it's ever been. But I honestly, like I said, I don't focus on that because these are all unrealized gains. They mean absolutely nothing. The way I think about it is, look, you could have the world's fastest growing stock inside of your portfolio. You could have the likes of Nvidia, for example. You could be all in on one single stock, and you might see it at the moment up 400-500% and think, wow, you're amazing. You're the best investor ever. And that's all of your money. But anything you see there is just unrealized gains all on paper. Next year, 2 years, 5 years from now, that number could be completely different. It could be negative for all I care and all I know. I can't control that, but just remember that these are unrealized gains. So although the green numbers are nice to see for your psychology, hopefully I'm making sense and making this clear now. It shouldn't affect the way you invest as a long-term investor. And the fact that it's inside a pension anyway really means that I can't withdraw this and take this money. This money isn't money that I could take out and use right now. This is for later on down the line, be way into my late 50s before I can actually touch this. So it's all about trying to get new money in. Let me just leave you with the classic lesson. I actually really like the way I can display all the data here on the chart, where you have all these green dots of where I've invested into this portfolio. And as you can see along the way, just imagine if you couldn't see the future from these green dots. You think here, for example, back in December 2024, if you're thinking, oh God, another all-time high, do I really want to invest then? And you didn't see an all-time high for quite a long time. You have to wait until January. Then I think another investment comes in. You think, oh God, is it going to go down again? Or, oh, we're quite high now. I'm a bit scared. And yeah, we had quite a rocky start to 2025. And here around all the tariffs, just look how far down a cost of the share of this fund. It dipped below 200. Almost everyone losing their minds, selling out of their portfolios, worried about what happen. But I just continued investing the same as I would. And if anything, I tried to put more money in because of before the end of the tax year. So again, I thought I might get a bit lucky, but I didn't really care at the end of the day. I just put money in when I had it. And then again, yet again, you're thinking, oh God, the market's really high at the moment. Do I really want to invest? But I don't even think about that. I just automatically invest. All sounds so simple, yet it's very, very hard to do, as many of you will know, and especially if you're a beginner investor. It's all good when the market's going up, but when the market's going down and things aren't so rosy, it's so easy to get caught up in all the negative nonsense and all the negative noise out there in the media. All of the news stories that I speak about at the beginning are really good to understand what's going on, but I don't let any of them affect the way I invest. None of them have any impact at all on how I invest my money, because it's all short-term nonsense, doesn't matter one bit. I can't wait to come back to videos like this in 10, 20 years' time, where I can just validate all of this and just explain to you that it shouldn't matter what happens in the news or what presidents and different leaders do in the short term, because in 20 years' time, they won't even be around. Let me know how you're getting on in the comment section. As always, I'll see you in the next video. Happy investing.